Good morning and welcome to GrainTV. It's September 18th, 2012. To my left is Logan Burgess and I'm Brock. Let's turn over to Fire Tip to see what's happening in Chicago. Corn is up just a few cents this morning. Beans are again down about 10.5 cents. In the overnight session though, we were down quite a bit sharper, so we are getting a little bit of support this morning. Wheat in Chicago and Kansas City are both up a few cents. The dollar index, it looks like it's catching a little bit of a bid, and crude oil is off another 30 cents this morning.
That's right, Brock. We hop over here to a daily soybean chart here. You can see that we are trading down about 8 cents right now, but as you said, we're well above the lows that we printed in the overnight session. We're going to revisit this soybean contract here from kind of a technical standpoint later in the show, but we kind of want to focus on what we saw yesterday, that limit move, really technical driven selling, fund liquidation here. If we take a look at what we saw in the Commitment of Traders report on Friday, you can see here that the funds were about 215,000 contracts net long. Just in yesterday's action, they took 20,000 of those contracts off the table, liquidating about 10% of their positions, really helping this thing move down limit. Just for a heads up, it doesn't look like we're going to be testing them today, but we are trading under expanded limits for soybeans and soybean meal. $1.05 on the soybean contract, $30 per ton on the soy meal contract, so just a good thing to keep in the back of your mind. It does look like, though, this market's finding some support here. One more thing that could be weighing on this market a little bit, Brock, is harvest pressure coming in. What are we kind of looking at there?
You know, I think harvest pressure is really weighing on this market. Corn is still at a record pace, and they're actually increasing that record pace on the harvest. We're 26% complete as of yesterday's report. 5-year average is about 9%, so we're quite a bit ahead of where we should be for this time of year. Soybeans, similar story. We're about 10% complete on harvest, should be about 4% complete, so we're moving along pretty rapidly on the soybean harvest as well, which I think helped add to pressure last night.
Right.
If you take a look at where we are in comparison to 2010 to 2012, where we're at this year is the red line here. You can see that we actually increased that pace over the last week or so. Compared to the previous record pace, the blue line 2010, we're quite a bit ahead of there, and where we should be this time of year is the green line, so we're moving along pretty rapidly in the corn harvest. Similar story for beans. Red line here, we're about 10% complete. Where we should be for this time of year is about 4% complete, so you can see we're well ahead of that pace and well ahead of where we were in 2010 and 2011. So I do think harvest pressure will continue to add pressure over the next week or so as we continue to move rather quickly through corn and soybean harvest.
Certainly, Brock. We've been getting a lot of calls this morning, obviously. How low can the soybean market go? We just wanted to kind of share with you here this morning what are a couple things that we're looking at here on this November soybean chart. And, you know, as we said, Brock, 1691, that area should have acted as support to this market. We traded through it yesterday with conviction here, but right now we're seeing a 50-day moving average coming in here. It looks like we're trading right around there now. 1658 looks like that's coming in here. And we also have a trend line support here down around 1580 there. So those certainly should act as support here. Additionally, we have a lot of choppy trade action here. Technical traders look at this as an area that should provide support as well. But you know, with how long the funds are still, it's really anybody's guess at this point. The fundamentals in this market remain strong, but it certainly looked like a lot of profits were taken off the table there. We do expect this area of 1625 to really add as some major support to this market. It looks like with the open of pit trading here, we do have some end users coming in and buying at these levels. That's kind of the big question right now. Are these price levels high enough to really crush demand? When will the end users come in and decide that it's time to lock in some forward beans here? And if you have any questions about that, certainly give us a call here at the office. Or if you want to take a look at the Fire Tip platform for yourself, do some of this charting yourself in your home or office, visit us at grainhedge.com. We'll set you up with a demo.